Hi everyone, Daniel here for the Daniel Eigenmann Forum. Today, I hope, first of all, I hope you're having a good weekend here in Perth. We finally got some bit of sun after a week really rainy. It was actually really heavy rain, so it's nice to see some sun. It's still a bit cold, but the sun is back and it's really nice to see. Today I wanted to quickly talk about fixed rates. Why? Because this week I've had a few questions from my clients. I've also been able to help clients include a bit of certainty into their repayment for the next 3 to 5 years. And the one thing I wanted to talk about is about the rates. When you look at rates, you have three choices. You can either go for a variable rate, a rate that will change. Now it will go up and down. You don't really have any controls about the rate. Or you have a fixed rate where you can fix your rate for 1 to 5 years in most cases, or what you have is a split loan rate, and that basically means that you have both. Me being Swiss, I actually like to be neutral, so I like to have both a fixed rate and a variable rate. The question there is obviously, how long are you going to fix your fix for, and how are you going to split your loan? You can split it at 50-50, 30-70, basically you choose. There are certain factors that you want to take into account when you split the loan, but if you want to know a little bit more about it, just give me a ring or post a message down there. All right, but about fixed rate, very quickly. Fixed rate is a great way in this particular environment where rates are moving all over the place. It's a great way of having some certainty for a certain period of time as to what your repayments are going to be. For example, I was talking to a client this week, and he was saying that his bank had decided to up his rate, he's an investor, his rate from 4% to 4.54% in the next 2 weeks. So he called me quite desperately and said, what can I do? I've had a look at his situation, and from a variable point of view, he was already on a pretty good rate. Even at 4.54 for his bank, unless he was going to refinance somewhere else, he was actually the price was all right. But I said to him, listen, what we can do, we can actually fix your rate for the next 2 years at 3.88%, which is quite a good rate, as you can imagine. So this is what we've done. We've basically take a 4.54 rate and we turn it into a 3.88 with certainty for the next 2 years. Is it going to apply to you? It really depends on the situation. Again, if you've got any questions, if you want me to review your particular case, give me a ring. Again, put a message in. The last thing I want to say about fixed rates. They're great because they provide you with certainty. You know what the rate is going to be. However, remember, your fixed rate is only fixed at the time of settlement. All right. So unless you lock the rate for your fixed rate is going to be the one that you get at settlement. To protect yourself from your rate changing between now and settlement is to lock the rate. Most banks offer you the option to lock your rate, but it's going to cost you. How much? Usually between 0.1 to 0.15% of the value of your loan. Does it make sense to pay the rate lock? Well, it really depends on whether you think the rates are going to change from between now and settlement, or whether it makes sense from a financial point of view to pay the fee based on what you think the rates are going to do in the next 2 or 3 years. All right. Again, if you've got any questions, give me a call, or again, leave a message and I'll get back to you. So remember, when it comes to rates, you've got three choices: a variable rate, a fixed rate, or a split loan. And remember, the fixed rate is only fixed at the time of settlement unless you decide to pay a rate lock fee. Again, thank you very much for listening. Have a nice week. I'll talk to you later. See you later. Bye.